Hello everyone, here's Vladimir from CryptoTax, and today we have Clinton Donnelly with us as our guest.
It's a pleasure to be here, Vladimir.
Hi Clinton. Clinton is a US and international tax law expert, and he's also enrolled agent, licensed by the IRS. By the way, what is that enrolled agent?
Enrolled agent is the highest level of professional certification that you can receive from the IRS, and once you've received it, you're allowed to represent taxpayers before the IRS anywhere in the world. That's exactly what I do. I have clients in 47 different countries. When I say represent them, I not only prepare their tax returns, oftentimes it's helping them get tax amnesty for things they didn't do right, but also I then go on and if the IRS has problems with the tax returns or any other challenges, I go and defend them. I get refunds for people. I defend them all the way up to appeals to tax court. So I'm a total solution when it comes to taxes. But I focus on cryptocurrency and expats because both of them have unique foreign reporting obligations.
Mm-hmm. And I think that's again something very interesting for our audience, because your specialization is anti-money laundering, or AML reporting. What is that AML reporting?
Well, I have an advanced law degree in international financial regulation, and there are a number of elements to it. And what I actually specialized and did my dissertation on was the Financial Action Task Force. And this is an interesting committee or agency, and most people have never heard of it. And this agency formulates recommendations that it wants every country to implement, and they all go after money laundering. This agency came into birth around 1989. This is about the time a couple things came together. One, in the United States, Ronald Reagan was president, and he had declared the war on drugs. At this time, we had a guy named Pablo Escobar of narco fame who was bringing more cocaine into our country than could be imagined. And he was taking money out to the tune of $61 million a day, was leaving the US. They couldn't capture him committing the crime of distributing cocaine into the US. But they could capture the money going back to him, but they couldn't prove that the money was related to the crime. So the international community got together and they created what's basically they created the crime of money laundering. Or some countries, they call it the proceeds of crime. So the penalty for money laundering is equal to whatever the crime was that created that money. So therefore, you might be making a fortune selling drugs and nobody's catching you, but all of a sudden you have cash. What do I do with this cash? Are you storing it in foreign banks? Are you storing it in cryptos? Are you, buying race horses and trading them? All of a sudden you have assets that are sticky to you. They get you into trouble and get you into jail. So they came up with these regulations where the Financial Action Task Force came up with these 40 recommendations criminalizing money laundering. Also going after gatekeepers. These would be people that allow access to the financial system. So we're talking lawyers, incorporation firms, banks, brokerages, money service bureaus. All these are gatekeepers for people to get into the money system. And the FATF, the Financial Tax Force, said everybody needs to regulate this. Now here's what happens. The IMF, the International Monetary Fund, has a program where they review every country in the world and they measure them in terms of compliance with international money monitoring standards and these FATF recommendations. And if you fail these by your country not implementing these recommendations, they will then issue a recommendation that people stop doing financial transactions, or it's called being blacklisted or gray listed. And all of a sudden, it's very difficult for anybody in your country to get money in and out. Businesses slow down. It becomes an incredibly painful experience. So what happens is this whole mechanism of peer review, IMF review, forces individual countries to have to implement laws to implement these financial action task force recommendations. In the US, one of the first laws for implementing that was called the Bank Secrecy Act. And in other countries, it might be called the Proceeds of Crime Act. Every country has these. Every country is having money regulation that achieves the same objectives. So every year they meet and they improve things. Well, they just came out. They came out in 2013 with some recommendations about cryptos, which they call them virtual assets. They came out in October of 2018, adding management of cryptocurrencies in as one of these recommendations, the formal recommendations. Just in June, they came out with a formal guidance in terms of how cryptos should be regulated by each country. And these recommendations were approved by the UN. They were approved by the G20 and the G7 countries. They're all together. And they also, in these recommendations said that they have, because the threat to the international monetary system from the bad actors is so severe, they need urgent and serious attention needs to be done. And there's going to be a 12-month review on each country and their compliance within 12 months. So we're talking 12 months, June 2020, the FATF is going to review how each country is enforcing these. Now, what does that mean? That the US is going to have to enforce this. This means every exchange has to be regulated. That means that there's going to be a regulatory body, like a bank supervisor or whatever, is going to be over each exchange in that country. Every transaction is got to have know your client due diligence information. And they recommended that every trade over $1,000 value, 1,000 euros, $1,000 value, has to have know your client information attached to it. So when the trade happens, there's going to be an exchange of, like, if I sent you $2,000 in Bitcoin, my identity information is going to be shipped to the exchange, and the exchange is also going to handle your identity information. They're not going to give it to me nor mine to you, but the exchange has to hold on to this to defend it. So this is where cryptos is going. The anonymousness is under threat.
But this is crypto. Come on, we're talking about exchanges somewhere in Hong Kong or in Panama or maybe in some African country in the future. So do you think the exchanges will just follow the new rules, or they will make the life of the clients easier?
Well, it remains to be seen. I think some will comply and others will try to live on the fringe. The levers of control that a government has is that they can go after not just shutting down your exchange, but go after you as the manager, the owner, the operator of that exchange. If you're even in the situation of peer-to-peer transactional systems, people say, wait, it doesn't exist in any country. Well, they can go after who's hosting those computers, who's running those systems, and go after those people as enablers, and they can hit them with massive fines. That's why the whole banking system is so wrapped up into this anti-money laundering compliance. And pretty soon crypto exchanges will be as well.
Mm-hmm. Okay. But I think most of the people in crypto are not into money laundering or some illegal activities. It's just trading, it's investing, having fun with the new technologies. So how is it connected to all those, let's say, normal people?
Well, what I tell my clients is that when it comes to anti-money laundering reporting, that the criminals don't report these things. So don't act like a criminal and file your returns. Right? If you hide, you think, I'm just an innocent guy, I don't have to worry about this. No, they're going to come after you because the authorities cannot tell who is engaged in money laundering and who is just somebody who was too stupid to file returns. Because here's how money laundering works. Right? Someone over here just made $100,000 selling narcotics. He now needs to clean that money. So he's got $100,000. He comes to me, I'm a businessman, and says, hey, I'd like to buy $50,000 worth of something. And you say, what can you buy? Well, how about those cars over there? I buy all those cars from you. And I sell him those cars. And then he takes these cars over to you. He says, how much would you buy for these cars? I'll give you 45,000, you say. And so he now has 45,000. So he's just clean $50,000. You're sitting here and you say, oh, I got 45,000. What am I going to do with it? Oh, I'll stick it into Binance. And so you unwittingly have been an agent in money laundering transactions. So innocent people get caught up in this all the time. Older people, some nice man came to our house and he just wanted us to create a company for him and he'd pay us $20,000, and we just had to own the company. So they did it, They don't realize that the guy was using the company as a front to run all sorts of transactions through. So, that's why. So therefore, the government treats everybody the same. They don't know who the criminals are ahead of time.
Okay, so what we should do, like if you give me this example and somebody comes to me and offers me, I don't know, $20,000 for $10,000 worth of Bitcoin, and I think, that could be a good deal. Mm-hmm. What could I do?
That's a great question, because your question that you would ask is, who is this person, right? Do I know them? Where did this money come from? Because you might be handling dirty money. You are, in the old days, we used to talk about, it's a slang word, I don't think, in the US they call it a fence. You stole some stuff, you take it to the guy who's the fence and he cleans it for you. Mm-hmm. Well, now it's modern day. Give you 20,000, you ship him some Bitcoin, you got 20,000 in the bank,
Yeah, but if I did my due diligence and I just asked the questions like, who are you? And it seems to me legit. So am I clean then?
You need to do due diligence, whatever that means. You verify who their identity is, ask where the money came from. It's the same thing the banks are going to do if you brought in, and you wanted to take $20,000 out of the bank. They can say, well, what's it for? Where did this money come from? And it just needs to be legal. That's what you're concerned about.
Coming back to the tax topic, we hear also quite a lot that the AML regulation, anti-money laundering, is connected also to the tax and it could be even used by tax authorities to identify those who are not paying taxes or maybe push them to disclose all the information.
Yes, in my opinion, the anti-money laundering is the easiest way for the government to go after enforcement for those people who are not reporting their cryptocurrencies. There are, of course, two aspects to reporting cryptocurrencies. One is reporting your income, and CryptoTax offers a great tool for helping people calculate the capital gains and identify your other income for creating those forms for your tax return, Form 8949. But also, you need to report your anti-money laundering. There's three elements to it. The first one is on Schedule B. At bottom, at Part 3, it says, did you ever have financial interest in a foreign bank account or foreign financial institution of any kind? And you need to answer yes. So let's say you're talking Binance. Well, what country is Binance in today? Is it Hong Kong? Is it Korea? Is it Malta? You check the box. You got to say, you answer it the best you can. Then the FBAR form is the second anti-money laundering form. This came out of the Bank Secrecy Act, where you have to declare the maximum balances, the highest amount that you had in the account for all your foreign accounts. You add up all those maximums, and if they are under 10,000, all of them together, then you don't have to file this form. But for most people, they're going to go over 10,000 pretty quickly if you were trading, in which case you need to report all the accounts. Why is that important? If you don't report on the FBAR form when you're required to, it's a $10,000 penalty per account you didn't report. So let's say I had $20,000 on Binance and I took the $20,000 and I also moved it over to KuCoin and I moved it over to Bitstamp. And so I took the $20,000 and moved it over here. It's now 20 on KuCoin, it's now 20 on Bitstamp. My total is 20, 20, 20, or $60,000. Now, if I had 5 other crypto exchanges offshore that I had, but nothing in them, I have to report all of those. Those 3 plus the other 5, 8 exchanges. The penalty for not reporting it is $10,000 per exchange, per year. Per exchange, per year.
Yeah, that's crazy stuff. And you mentioned also that there's also the third component.
There's Form 8938.
Yeah.
This came in under the FATCA law, Financial Account Tax Compliance Act. A very recent law, came into place 2011 and was started 2010. But you have to report not just your foreign accounts, but also all your foreign transactions. So what is a foreign transaction? And under the Internal Revenue Code, Section 6038D, it defines that a foreign financial transaction is any transaction where the other person that you dealt with is not a U.S. person. So whether you're buying or selling, if you don't know who the other person is, we're going to have to assume that they're a foreign person. Well, you might be trading right in the U.S. on Coinbase, and you may be trading with somebody from Yemen who's taking that money to fund terrorism. You don't know. That's why you have to report it. So you have to report. So 8938 overlaps with FBAR. Both of them, you report foreign accounts. But the 8938, we also have to report the total volume of all our buys and sell transactions that we do on exchanges. And that can get to be quite a large number if you're a frequent trader. Which is why people need to use CryptoTax software, because you can calculate the numbers you need to put on your return.
Actually, that was the major motivation for us to make CryptoTax software, because we realized this is something which is very difficult to do on yourself. Like, even if you know what you're doing, we talk to tax advisors and they know like what needs to be done. It's still quite a complex process. So that's why we decided to make an application that can be used by anyone, by traders, by hodlers, by just people playing around with cryptos, and that will make their life easier, that they can sleep well, because they just only need to input all the information to disclose properly, and they'll get all the reports that they need, and they will be on the safe side.
Well, actually, I'm very excited about CryptoTax because you do the anti-money laundering for it as well. I have worked with a variety of crypto capital gain services, and they all say, we'll give you the information you need to do your tax return. But they're just doing capital gains. They're not doing the anti-money laundering form, and they're misrepresenting the complexity of taxes to people, and they're not delivering a total solution. And that's why, at this point, I'm only aware of 2 other services that are generating the numbers you need for anti-money laundering report. And this is the more critical thing than even reporting your capital gains.
Yeah. And I think what people are not aware is that, and they think, okay, maybe we're in a gray area and it's not clear. Is it foreign account or not? Does it have to be reported? I mean, to be risk averse and to reduce this risk of doing something wrong, just report everything. Just disclose everything, because if you do that, it's not gonna change your tax liability. You're just disclosing your foreign accounts, and that's why it's also our approach in our solution to let the people just put all the information they've got, create all the reports they need, and just disclose everything.
This is one of those rare areas where it's better to over-disclose than to under-disclose. There's no penalty for telling the IRS too much in the anti-money laundering forms. But if you try to chisel it down and make it smaller and not report things, you're only creating a really expensive problem for yourself.
Yes. So you mentioned it was $10,000 per FBAR violation, and
$10,000 per. When you had to report, it's $10,000 per account that you don't report. So if we just had the 3 accounts I talked about, you didn't report that, that's $30,000 of penalties, and they can assign that for every year you didn't do it.
But that was just for FBAR, and
that's
if you
just
need
FBAR.
to report FATCA, then
it's another $10,000.
It's another $10,000. Wow.
The other thing is, if you don't do the other form, the 8938, then when they come and calculate that you underpaid them, not filling that form out allows them to hit you with a 40% penalty charge for underreporting on foreign assets. So you want to have that as well, because that protects you against the 40% penalty.
Okay, wow. And also we had this discussion of like, okay, I didn't report it in the past, and it's been already a few years, so probably it's already too late for anybody to come after me. So how much does the IRS or any other authority have time to come after me for not reporting my taxes, or FBAR or FATCA?
You know, that is a great question, Vladimir. I think a lot of people think the same question. And they think, well, I haven't heard of the IRS cracking down on anyone, so I think maybe I'm safe, you know. So, but what you don't realize is, well, people know that there's what we call a statute of limitations. There's so many years you can come after you. But if your return involves a substantial misrepresentation of how much your income was, or if you fail to even file the FBAR 8938, you lose all statute of limitation protections. They have forever to come back after you. Now, fact of the matter is they typically don't go beyond 6 to 8 years because it becomes tough with the evidence to prove things. So you have no protection, and they don't have to rush. They have 6 years after you filed your return to come after you easily, and they can go further than that. So what I anticipate is those people whom they've already identified as being crypto traders, they have already started issuing them courtesy letters, which is like a freebie. They basically said, it's a specific letter, many of them are getting it, form 6173, 6174, 6174A, letters that say you should report these crypto transactions if you haven't done so already. They know who you are, they know how big you are, and you need to act quickly to get tax amnesty, under which we can go back and we can fix prior tax returns. We can report the capital gains if you haven't reported it. We can file the FBAR forms and the Form 8938s for prior years, because the mere act of filing them late subjects you to a $10,000 penalty. But with tax amnesty, we get that waived. So, I have a number of my clients will come in multiple years, they didn't file. I use a technique called like-kind exchange to push a lot of the tax complications out from back years into the current.
What is actually like-kind exchange?
Like-kind exchange is a mechanism for treating capital gains. So cryptos are taxed on the profit you make on the coin whenever you sell it. Whether it's crypto to crypto, that's taxable, or crypto to fiat. A lot of people think only crypto to fiat is taxable. But when you go crypto to crypto, that's taxable as well. However, up until 2018, there was a law called like-kind exchange, where if I had a similar like-kind, one coin for another, that I could pass the capital gains onto that coin when I sell it in the future, not at the time that I did the exchange. So I buy a coin, I buy Bitcoin in 2016, I swap it for Ethereum in the beginning of 17, I swap it for Ripple, latter part of 17. I'm not paying taxes on any of these. But when I come in 2018 and I sell that Ripple for cash, now I calculate the gain all the way back from when I bought the Bitcoin in 16. So it kind of inherits that purchase date and the cost basis. And then we pay capital gains on it then. So what's cool about this is that 2018, most people lost a lot of money. So instead of paying high amounts of gains in 2017, I've actually catched the downturn and we hit the capital gains at a lower amount. Case in point, I have one client who had made $2 million in 2017. And by using like-kind exchange, I eliminated his tax obligations substantially to, he would have paid $500,000 in taxes in his situation. And I was able to eliminate it down to $150,000. I saved him $350,000 by using like-kind exchange. And we did tax amnesty, filed the back FBARs and 8938 forms so that he didn't get penalized for those. He's totally compliant, and now he can sleep. Don't have to worry about the IRS coming after him.
Yeah, I think this is something very, very interesting, because most people they're not really aware of this topic, or they think, okay, I'm not such a big fish, or it has been already such a long time and I'm not within those 10, 13,000 people who got the letter from the IRS. But like, just imagine 2017 was actually the best year in crypto so far, and so many people had huge profits. Like, even if they didn't switch to fiat, they made profits in crypto.
Yes.
So this is some juicy stuff for the IRS to come after, right? And basically with the other reports not being done on FBAR or the FATCA reports, they have unlimited time to go for all the 2017 traders.
Oh yeah, so this is kind of like the new model of tax enforcement. With if we just audited capital gains, the IRS have to say, here's a letter, we're going to audit your capital gains, please send us your documents, and then they look at them, they analyze them, and they match them up, and it takes time, and it takes a human person to do it. Modern IRS law enforcement, they're doing the same things that big corporations are doing with data mining, big data. They've already determined who the traders are. And they know they can then go and say, well, did this person file an FBAR form? And if they didn't, you're now on the list of people we're going after. So they just go after the top people, they send them a list, or they already sent the courtesy letter, but the next letter is going to be, we know that you had accounts on these foreign places, and we're going to hit you with a $10,000 penalty for these 3 accounts. That's $30,000, and we know you had those for multiple years. So we're going back 6 years, for a total of 6 years, let's say. In this scenario, that'd be a $180,000 penalty. They will whack you with day one. That's what they can do.
Yeah, so actually then you have to do all the work.
Right? You have to do all the work. The computers are issuing this letter, and then you have 90 days to explain why that's not the situation. And if you don't respond in 90 days, they'll hit you, the penalty goes up again for another $10,000 for each one of them. And it keeps going on up until it's $50,000 per account if you don't respond in 6 months. I mean, they can, look, IRS just wants money. They don't want to argue over your capital gains calculation. They don't have time for that. They just want money. So they're hitting you with these penalties. They're immediately assessed. If your penalties are over $52,000, they can seize and revoke your passport. And they can keep you in the country. If you're out of the country, you travel again, you'll be immediately brought home. They will put you into a payment plan to pay off your debt over 7 years. If you don't have the money, they'll go after your assets. The IRS is interested in the cash. The easiest way for them to get the cash is to go after people with failing to do the anti-money laundering. The capital gains, they're going to look at that last. That's only if you really made a mess of your life, really made a mess of these other things. Then they'll go after the capital gains because it's too labor intensive for them to go after otherwise. This is why it's so important that you need to get the anti-money laundering reports correct.
Okay, so I think this is really serious, and most people are not aware. They're just thinking maybe about the taxes and informing themselves, like what amount of taxes should I pay, or what are the risks that they will catch me, and if I don't report, what's gonna happen. But actually, the risk is hidden somewhere else, and it's just behind your back. It's the AML regulation and all the forms you need to report according to AML regulation and also the FBAR reporting. So it's really, really important that people realize that it's not just about reporting and paying taxes, but also reporting all the other stuff you need to do, and that in this case, disclosing as much as possible is maybe gonna save your life, because the penalties and the possibilities the IRS has to put you in a fine and to revoke your passport, that's so crazy.
Oh, it's crazy. I had a person come and say to me, IRS would never do that. There'd be a public outcry. Well, to be sure, they're treating it with kid gloves. But when the news hits that this crypto trader who hadn't paid $300,000 in taxes, the IRS has cracked down on him. The news media loves those stories. Everybody loves tax cheats that get caught. as long as it's not them. And I have to say this, that a lot of the crypto traders I knew in the US in 2017, they were so giddy with the run up of prices, especially come September on into the rest of the year. They were so giddy and gloating over how much they'd made that they unwittingly alienated a large chunk of the population that wasn't participating in cryptocurrencies. So those people were all going home at night saying, oh, I wish I was making a couple 100,000 like my friend, who bought the Bitcoins, and he seems smart. How come I'm stupid? Well, all of a sudden, when you get cracked down on, they're going to feel a whole lot better about themselves, that they didn't get caught up in all that mischievous cryptocurrency stuff. So I'm laying out the social mood is very supportive of the IRS cracking down. They're doing it with very kid gloves. We're already seeing that. But if this is you, if you're a trader, particularly in 17, you need to act now with tax amnesty to get your tax affairs in order so that you're not a victim. You're not somebody we hear about on the news.
Okay. What we hear from many of our clients and also having private discussions, it's of course crypto is all about freedom. I do what I want, and nobody can take my bitcoins away from me. And if I want, I can be very anonymous in my transactions. And lots of people say, okay, I'm trading only on some exchanges that are definitely not under any control of any government. They may disappear tomorrow and they will take my cryptos, but they also take all the information with them. So what do you think for those people who are, let's say, very conscious about how they use cryptos, how to stay anonymous? Do you think that they're safe from this risk of being landing on the blacklist of IRS?
You're going to run into problems over time. Even if, let's say you had cryptos and you just stopped trading them. You had them in foreign exchanges, but you hodl for a year or two. Let's say it's now 2021 and you've not really disclosed that you have these. All of a sudden you want to cash some coins out and you go to an exchange and they're going to say, well, where'd these cryptos come from? You go, oh, I've been sitting on them. Well, prove that. You can't prove anything with cryptos. Whereas with cash, I'm in other, I can say, oh, this is my paycheck. I got my paycheck deposited into this bank every month. That's where this money came from. But with cryptos, it comes from who knows where. It's anonymous. So that puts a burden on an exchange or a bank. Well, actually, it's two steps. It's going to put a burden on an exchange who's trying to be compliant with Know Your Client regulations to give you the cash for your cryptos. Now all of a sudden you got $100,000 in cash. What are you going to do? You're going to go over to a bank and you're going to deposit the bank. The bank's going to say, oh, wait a second, where did this money come from? And you go, oh, I got it from this exchange. Where'd that exchange come from? Where'd that, oh, I don't know. This sounds dirty. I don't want to touch it. So it's going to cause a problem.
So I imagine it's like a kind of a chain, right? And like latest when you try to cash out with traditional financial institutions like the bank, there will be questions, and you need to be able to respond to them, right?
Yep.
But probably it's gonna happen even before, because sooner or later the exchanges themselves they will need to comply with all the regulation. Because I mean we've seen this interview with U.S. Treasury Secretary who said like all the players in the crypto space have to be treated equally as the financial institutions.
Yes, fully regulated.
Yeah, and as you mentioned, actually there are these international bodies who can basically dictate to the foreign governments how to make laws and how their financial institutions shall behave. So meaning that sooner or later the crypto exchanges they will more and more become compliant, and we see it actually with the KYC procedures coming even now with the decentralized exchanges. So I see it like a chain, and at least the bank will ask questions, if not the exchange before, and if not, and we have another topic here, it's also with the KYC, the exchanges know who you are, they have the information about you. Are they going to share this information with the tax authorities? We've seen actually Bitfinex, one of the major exchanges, sending emails to their customers and advising them that they will report to according to the CRS common reporting standards and the FATF regulations to the IRS.
Mm-hmm.
So there seems to be like really huge development in the sense of increased compliance requirements and even automated data exchange. And my personal opinion is that the exchanges, they want to earn money with their customers, but they don't want to land in jail, right? So they will comply, and everybody is actually at the risk.
Oh, it's significant risk, and just the fact that I'm explaining it doesn't mean I like this situation. It doesn't make me feel terribly comfortable, but I don't know how I could ever escape it. But the exchanges, when they're regulated, have to know who all their clients are. They have to know where you live, and they have to have proof that you live there, proof of your identity. They need to know the source of the funds that you're bringing into their account. They also have to report back to the government, well, usually an agency of the government, any suspicious activities. Well, just based on how we define suspicious activities, virtually every trade in crypto is suspicious because you have no idea who you're getting it from, and you don't know who you're trading with. It's inherently suspicious. So they have to comply with that. If they don't comply with it, they themselves, the exchange owners and operators, they will get penalties and even criminal enforcement against them. So it's very serious to them. It is tough when I buy. When we ask the question, what is the source of funds? Where does money come from? The more I move the money from its original when I originally received it, the longer the chain is I have to paint to show the source of the money. So, for example, if I said I'm working a job, I save money every month, and I take that money and I put it into Coinbase. I then take it from Coinbase and I switch it to Ripple, and I'm trading it over here on Binance. And then I took it from Binance to this other ICO, and then I sell it on that exchange and brought it back, and then I took it back, brought it back to Bitcoin, back to Binance, and here I have, $100,000, which I'd like to use to put a down payment on my house. Well, they're gonna say, well, where'd that money come from? Well, I got it from savings. Well, prove that. Well, no, you just took it on this big daisy chain that you can't prove anything of what it was. So these regulations end up restricting, in my opinion, the flow of assets, the flow of cash. The more you move it, the more difficult it is to prove it's legitimate. And they operate under the assumption that it's not legitimate unless you can prove it. So, and they take significant risk when they approve something as being legitimate. So I think looking forward, I think we're going to see more of a movement of mainline brokerage houses doing crypto exchange work. So like a Fidelity Investors, a Vanguard, Merrill Lynch, they'll have their own crypto exchanges. They will be compliant with SEC regulations, and and you trade just within their exchange. You don't go jumping around to all other exchanges. Robinhood's already doing this. So that way you can prove the money came in, and you can prove the money went out, and it was all related. You are protected from a know your client point of view, source of funds. There's no foreign exchanges involved. And I think we're going to see by this time next year, summertime 2020, I think you're going to see all the major exchanges will start to have their own crypto. All the major brokerage houses will have their own crypto exchanges, and you just do everything in-house. Mm-hmm. That's my prediction. Yeah. And if I'm right, you guys owe me a beer.
I really hope you're right, because that would mean that there is a mass adoption of cryptos and acceptance also by the traditional players. So I would love to see that happening. But also if it doesn't happen, like let's say we just have the traditional players, the crypto exchange. We got Binance, Bitfinex, BitMEX, and everybody else, staying in the field, leading the field. Do you think that with the new the changes that have been passed now with Financial Action Task Force?
Yes.
It was just a few weeks ago. Do you think that there's going to be something to see some change in the next 12, 24 months?
On those exchanges? Yeah, in terms of looking forward, I think we've already started to see it with Binance, who has said that they're not going to take any more American clients. I actually think they're opening up a Binance US operation. Now, why would they do that? They already know these regulations are coming down, and they need to isolate, in this case, Americans, because they have a unique set of regulatory requirements. But the fact of the matter is, it's not just Americans. It's Germans, it's English. They all have their own regulatory requirements. And it is important for a Binance to simplify its operations. Now, banks, like if we talked about Bank of America. Bank of America has operations in France, has operations in the UK, but these are separate incorporations or separate businesses in those companies. They have the same name, Bank of America, owned centrally by the US operation, but they're each their own separate company doing their own businesses. Binance and all exchanges have operated as some sort of umbrella international organization. They don't care which country you're in, okay? So that's what's going to change. That they can't be operating in multiple countries. So you're going to see your Binances will get fragmented.
That they need to be compliant.
Regulatory compliance.
In every country they operate.
In every country. Right. They're driven to have, they're going to create not only they're going to have to go to, now it's easy to do a US only exchange, but they're going to have to do a Germany only exchange, a UK only exchange, a Spanish exchange, a Bosnia exchange, little teeny countries that are going to be limited in their exchange. Well, what's the problem there? You have the issue of an exchange that doesn't have a critical enough mass of buyers and sellers to be able to close business. So it starts to, being big is good for an exchange, but when you're small, you don't have enough buyers and sellers to really have a legitimate market. So it's really going to fracture that space. Well, what's the answer to that? The mainline brokerage houses will start to bring in the crypto transactions. Why? Because of regulations, they will now handle these exchanges because they were afraid of the unregulated crypto. But like your major brokerage houses will start to bring these in, like Deutsche Bank will start to have its own crypto exchange for its German clients in Germany. It also have its a same platform will be Deutsche Bank's platform in the UK for their UK customers. And now people are going to feel better. The institutional investors that get in there, the big individuals that get into this, because now they trust those players in the crypto space. That's my perspective. I think you're going to see massive explosion in crypto, and all the players you're looking at today will be mostly gone if they're not bought up.
Mm-hmm. It sounds like you sound very pessimistic on one side, but very optimistic on the other one. So I like it. But tell me, what does it mean like for the let's say for the all the people in the crypto now?
That's a really good question. I mean, right? We've been talking already about underreporting of cryptos, the anti-money laundering issues. But if we jump ahead, say 3 years from now, and if you're a US taxpayer doing all your cryptos are being handled by your Fidelity Investors account on their crypto network, then Fidelity will simply issue you a 1099-B, which is a brokerage statement, which they'll list all your crypto transactions. They'll show you bought this coin at this price, you sold it at that price. And that's going to be beautiful. You just take those numbers, you plug them in on your tax return, you're done. So, and you don't have to do, since you're buying it through an SEC regulated exchange, you don't have to do any anti-money laundering reports on your Fidelity exchange. You don't have to report, it's all taken care of for you. So this is going to drive all sorts of business home.
Actually, we completely agree with you, and we see it also that, and we hope that in the future, all the crypto traders, they will not need to worry about taxes because their crypto exchange or the bank or the broker would do this for them. And actually, we even offer a solution for crypto exchanges to use our tax engine and to be able to create tax reports for their customers, like the banks are doing already in the traditional financial sector. But we're not there yet, right? The crypto exchanges is still kind of a crazy, fast-moving thing, and tax reporting for their clients is not really a primary objective for them,
No.
right? Not primary concern. So as of today, the crypto traders or crypto investors are left alone, right? You have these huge risks looming over you that you didn't file your taxes, or you didn't file any other reports you're required to file. And there are some exchanges that you trade on them. You're their customer, but they provide you all the information, different formats, and you need to take this, to consolidate, to do your calculations, and then you also need to know what you're doing. So that was actually the major driver why we founded CryptoTax, to make this easier, to automate the process, so that traders and investors can just pull the data from the different sources. We have a tax framework that is already there and that is fully compliant with the local law, and just with a few mouse clicks, you create your tax report, your tax return, and also all the other forms that you need. And I think it's very important for the people to be aware of the risks that they're having, and to know, okay, so there are some solutions out there in the market. So it's our solution, CryptoTax, but also some specialized tax lawyers, because I think this topic is also quite new for a lot of specialists in the tax fields. So we ourselves we are in this market, and we talk to different tax advisors, and we see that many of them still do not feel comfortable with the topic, and especially you mentioned with the AML topic. So they're doing taxes, but they know nothing about the AML, right?
And this is not just a U.S. problem. Because the regulations are going down internationally, in other countries they'll all have the similar reporting obligations. They might be different. It's not an FBAR and an A938. It's going to be different, but every crypto trader in each country has this sort of obligation, whether they're well laid out and explained to them or not.
Yeah.
Hey, I'm really excited about CryptoTax, the solution you're putting together, generating the capital gains reports that customers need to do their taxes, both currently and in prior years, plus the generating the FBAR and A938 information that you need to complete those forms, because it's very complicated doing it without a tool. And that's why I'm so excited about CryptoTax, because you're one of just a few companies that is generating both the AML and the capital gains reports. So I highly suggest people use a tool that will give you complete results you need to do that. And if you are going to do prior years, by all means get my book, Tax Amnesty Made Easy, on my website at DonnellyTaxLaw.com.
Yes, definitely. So we of course we made this tool to make the life easier and to automate all the processes, but it could get complicated. So we've heard about the like-kind exchange or some specific issues, or you got a letter from the IRS, right? Then of course it makes sense also to consult specialists, and so we have also Clinton Donnelly, and really an expert in this field. So I really advise to everyone to inform yourself and to really estimate what are the risks if you're not reporting or under-reporting, and just not do nothing. Do something. Take care of yourselves. It's not as bad as you think. There are solutions, and there are people who could help you.
Thank you.
Good. So thank you very much for being here.
You're welcome.
Yeah.